Good morning, viewers, and welcome to episode 11 of Your Money, Your Taxes. I'm Paresh Shah, CEO of Paresh Shah Financial Services, and with me today to answer all your questions about taxes is Mr. Lalit Abichandani, CPA. Welcome, Lalitji.
Thank you.
Lalitji is a practicing CPA with 25 years experience in US. He specializes in US taxation. He's been running a very successful CPA practice in New York. He and his firm provide tax service and tax planning for businesses as well as individuals. In addition to the regular trading businesses, his firm services healthcare, IT industry, hospitality, and entertainment industry. He has done hundreds of offshore voluntary disclosures and streamlined procedure cases and has become an expert in foreign bank account and US-India tax treaty. He is a CPA and tax advisor to businesses, professionals, Bollywood industry, and a lot of film personalities. His website is yourtaxadvisor.com. So, welcome Lalitji.
Thank you, Paresh.
And let's, we have spoken a lot about individual or personal taxation and reporting of their account. Let's discuss entrepreneurship or business setup in the US today. If someone decided to go into business, then what must he know and go through to set up?
Paresh, thank you very much for the great introduction. I'm happy to be here, and I know we talked about individual taxation, but most of the taxation depends on the businesses. And once you have decided to start your own businesses, there are four essential elements that you should look into. The very first thing in United States is the liability protection. The next one is the location. You must have a good location. The third one is the taxation. And finally, based on these three elements, you decide the setting up of entities. So those are the four key factors you should look into before you start a business.
Lalitji, it's great to know of these four factors, but I think our viewers would like more details. Can you just elaborate a little more on each of these four things?
So the first one, like I said, is liability protection. In a business, when you are setting up a business, you have to think it through what kind of a liability you will have when you are either selling your products or you're selling your services to customers, so that you want to cover your liabilities in a way so that you don't end up getting sued personally. The next one is the location. It's all about location when you are especially when you are in trading businesses. So you have to decide what is the best location for you. Is it the city or is it suburbs? Is it on internet? Do you want to do it out of your home? So that's the next thing. The third major factor is the taxation. Depending on the first two, you now want to see what kind of taxation would this particular entity or location will expose yourself to taxation. So you have to look into and analyze the tax aspect of that. And based on these three things, then you have setting up of entities. Again, Pareshji, it's not easy because there are four factors in setting up the entities as well. That we'll talk more into that.
As I understand, Lalitji, ultimately it boils down that there are several different types of entities that people can set up to do the businesses. And there are four major entities, as I understand from you. Can you explain these four major entities and in details tell our viewers what is each about,
So the four major entities that you can choose from is a sole proprietorship, partnership, corporation. Again, corporation could be C corporation or an S corporation. And the fourth one, which is more popular these days, is the limited liability company or a limited liability partnership. So you have basically these four areas that you want to look into.
Okay. So when you're looking at these four areas from a liability point of view, before we go into the taxation point of view, can you talk about from the liability perspective, which entities should be selected and why,
The main reason why we start picking up corporations or limited liability is for this very reason. You're very correct that in this country this is a litigious society, and there are liability, you need to have liability protection. The first two, the sole proprietorship and partnership, does not give you that protection. You could be sued personally when you set up sole proprietor or partnership. But the corporation, whether it's a C corporation or an S corporation, as well as LLC, which is limited liability company, gives you that protection, and you have to make sure that you are properly set up within these entities, and also you have to try to cover up through your insurances, so that you have layers and layers of protection within that, so that you are not personally exposed to your personal assets should something go wrong.
Ji, that is actually very, very critical. You know, we see it as planners. We meet people and we see this every single day, that people do not take adequate steps or think through things before they set up their entity. But now let's come to the other part of we talked about the liability part of it. Let's come to the other part of it, which is taxation. Now, I know it's a very vast subject, but just for briefly, let's start this topic today with discussing these four entities, and in terms of taxation, how is each of them taxed? Can you describe that for our viewers?
You are correct, Paresh. Taxation is a very vast topic. IRS code is almost 12,000 pages long, and for businesses there are different taxation rules for different entities. So to start with sole proprietorship, this is the easiest entity of all four that we talked about. It's a simple thing. You set up your business as a sole proprietor. You start with your basic accounting, and at the end of the year you have a profit and loss account. You basically have to submit your profit and loss account through a form called Schedule C within your personal tax return, and whatever profits you end up with, you end up paying Social Security taxes as well as federal and state taxes on that, and you're done with that. The next one is partnership. Again, this is little more complicated than sole proprietorship, but even this is rather simpler compared to corporation and LLCs. In partnerships, again, you have more than one person within your partnership, so there is an allocation of percentage for each partner. You submit annual partnership tax returns, in which you end up with a profit or loss, and you pay taxes on your allocated profit or loss at the end of the year. The third one is corporation. Now, within this corporation, there are two options you have. You have option one, which is C corporation. The other one is an S corporation. The C corporation is a little more complicated, a little more expensive than the other options, but it gives you a little more protection in there. But the C corporation, you have to file annual tax return. You have to have a proper bookkeeping done through a professional, as well as the taxes are paid by this entity. So let's say if you have a profit of $100,000, you pay federal taxes at the federal rate of, could be 25% or 30%, depending on where in the bracket you are, and as well as the state taxes on that. Whatever is remained after paying these taxes, you can only withdraw from that. It's called retained earnings. So you can withdraw money from there and pay again a second layer of taxes known as dividend tax. The fourth one is the limited liability company, or I should even say, before I even come to that, there is an S corporation. S corporation is a little more efficient, even though it's a corporation, but it's a little more efficient than C corporations, wherein you only pay taxes at one level. That is, whatever your profits are, they filter it down or flow it down to your personal taxes, and you pay taxes on that, and there is no dividend tax when it is S corporation. The fourth one and the final one is the limited liability company. Now, this is a lot more complicated than the first three. You have again 3 or 4 different options in there, and I don't want to go too much detail into that, but the taxation, we try and take the most efficient and cheapest option in there, but you have the protection from a limited liability point of view, and you have the taxation benefits within that. So that's why this particular option is more popular these days.
Lalitji, I know you gave us a lot of great information, but this is really, really, I mean, I think this topic is really tough, and everyone needs an expert like you to guide them through these various areas. But for our viewers today, can you take some time to explain what would be a process one would follow in order to set up an entity or decide or go through these complex issues and come upon some kind of conclusion?
Yeah, Pareshji, unfortunately, there is no quick fix. There is no one formula that we can just give it to everybody. So, and it is for this reason that we sit down with the owners before we set up the entity. We sit down with the owners and go through their particular data, and then help them make a decision as to what is the best option for them. And based on that, those analysis, then we go to the next level.
Okay, I see what you mean. So what are the other areas for our viewers? What are the other areas or taxes that business owners must know about? Yeah.
Okay, the very first thing that I always stress with my clients is the accounting, which business owners are a little more relaxed in that, but I give importance to accounting because this is the nervous system of your business. So once your accounting is in order, then we can move on to the taxation part of it. And other than corporate taxes, you have sales taxes if it is in a trading business. You have payroll taxes if you have employees. You have estimated taxes if you have profits during the year. So those are the things that we need to look at it more frequently. In my practice, I try and look at it every quarter so that we are right on track as far as the business is concerned, so that we don't end up with any kind of penalties or problems later on.
So Lalitji, you talked about sales taxes, payroll taxes, and estimated taxes. Now, could you elaborate a little more on each of these, please?
Okay, so the sales taxes, when you set up a business and you are either selling a product or selling a service, we have to look it up whether this particular product or service that you are providing is sales taxable. Pareshji, again, this is not easy. Each state has their own laws into that, and the same item could be sales taxable in one state but not sales taxable in the other state. So we have to look into it, and there are periodical sales tax reports to be filed, monthly, quarterly, annually, so we need to look into those areas as well. The next one is payroll tax. When you employ when you employ people and you have to give payroll, then you have to start paying payroll taxes on that. Again, this is a complicated area, but you have to do that. The third one is estimated taxes. The estimated taxes is basically on the profits of your company, and you have to pay Uncle Sam each quarter on the money that you have made.
Thank you, Lalitji. This is some of the great information, and but as I hear more and more from you, Lalitji, I realize that everyone needs to work with an expert like you. They need a good CPA and a good tax advisor. That is the backbone of your business. Without that, I think everyone is going to get lost. Thank you so much for sharing this valuable information. Viewers, hopefully you gathered very important information, and if you have any questions, please send them to lalitcpa@yourtaxadvisor.com or give him a call at his office. You can get his number on his website, yourtaxadvisor.com. Thank you very much, Lalitji. Thank you, viewers, and we shall see you in 2 weeks where we shall speak about life insurance.
Thank you very much. I think those questions were great. We will see you in 2 weeks.